Good evening, ladies and gentlemen. Welcome to the circus. I'm the biggest clown on the internet. I'm going to proclaim to be because no one else has the guts to admit it. But here we are. Grab your coffee, sit down. It's going to be a wild ride. I have this backwards. We got to do after coffee hour here. Anyways, folks, I want to kind of take you through obviously personal circumstance. We'll talk about the market, just some things that I find really interesting that I think we're about to see in this massive shift that's about to happen. I'm not talking about the stock prices. That's pure fugazi, up, down, all around. None of this makes sense. Fundamental investing doesn't matter. Throw a dart at the board again, you're usually making money, but if that's going to last is the real question here, and what you can kind of position yourself to do, and why I'm going back to this fundamental idea of starting from scratch, because that is kind of what it feels like after you liquidate most of your accounts for a real estate purchase. It's kind of daunting. I look at the mass amount of contribution room I have to my tax advantaged account and ran the math, and I'm like, I don't think this is going to refill for probably a good few years. It's going to be a little bit. We're going to talk about all of that. We'll talk about some of these dividend ETFs, growth stocks, a few other things in between. And if that is a conversation you'd appreciate, as always, just hit that like button. It's a Friday night, folks. We're bringing episode 1 of what will hopefully be a continuation and just kind of keeping a narrative running with the rest of you. So first and foremost, I want to show you a stock chart itself. And I want you to kind of get an idea of this, because this is still kind of mind-boggling. And it's a stock I never bought, and it was always for fundamental reasons. But this stock is the exception here. What you're looking at is the actual revenue growth of one of the largest companies on the planet. And if you notice, the 12-month trailing revenue pretty much for the last decade has relatively continually always gone down. Now, I want to show you the stock chart. Somehow, the stock chart has continually always gone up. This is like one of the most inverse ways of thinking of any kind of fundamental investor. So what company is this? How has this company been able to pull this off? Well, this shouldn't be a surprise for anyone that's done a little bit of digging into the dividend aristocrats. I mean, we're talking about huge yields here, but this is McDonald's. McDonald's Corporation, one of the companies that I think is going to resemble what I think we're going to see with most stocks. And I'm going to explain to you what I mean by that, because a lot of this has to do with earnings, right? If we take a look at McDonald's EPS growth, somehow in a declining decade of revenue, they're not nearly all-time high revenue. We're seeing this period where they've been able to still grow EPS. This is a fundamental reality that we're about to face in higher interest rates and this higher interest rated environment. This is something that's going to be happening with every company, has been happening, is going to continue to be happening, and that is no more revenue growth. The decade of just easy sitting back, the simple days, God, I miss the simple days. I used to be a full-time magician. We keep reminiscing on how good it was over the last, post the pandemic, before 2020, probably till about 2012, 2019 was the best time ever. Inflation wasn't rampant. People could work. You could afford a house. I was working only 3 days a week doing gigs. I'd work restaurants Fridays and Sundays. I'd be doing weddings and big paying shows on Saturday. That was the dream. That is where life was at its sweet spot, because you couldn't do no wrong investing because there was consistent revenue growth. And that's what we saw at companies like Apple, right? You look at Apple's revenue growth and the consistency has been absolutely jarring. Everyone was always stating, hey, this is the end of the iPhone. Apple's not going to grow anymore. And now for the first time, fundamentally, that's going to become probably a reality. The revenue growth is going to be behind us for the time being. And the economy, when it comes to interest rates, credit cards, I don't know how things have been so damn resilient. It's kind of shocking at how strong the economy has actually been in a time, where we're seeing, and you're probably hearing this everywhere, obviously record high outstanding credit card balances, US, Canada. It's been really bad, right? Because in the 6% interest rate environment, people aren't buying cars like they are, so Tesla's cutting prices. Higher interest rate environments, people, they're going to start questioning what they're buying. No more crazy Yu-Gi-Oh! And Pokemon cards, because, their mortgage payments is pretty much going to be costing them an extra, $1,000 Pokemon card every single month. Yet we're making it work as an economy. It's seeming that the back is not cracked, and this could potentially, it hasn't happened yet, but could be the first soft landing we've ever seen historically, I think, ever in an interest raise environment. But the fact is companies will not see the growth that they've seen in the past. So what they're going to do is start focusing on EPS. And this is why fundamentally the idea of investing to me has died. It's so hard. It's annoying, really, because you just can't take a base on anything. There's no more projecting into the future. Obviously, AI, we're going to see those things come into play, but that's only going to increase margin. That's only going to increase EPS. It's not talking about revenue growth, right? So I think with mega cap companies, this is going to be a relatively more intrigued conversation, especially as we head into this next earnings cycle. So when earnings hit, if anything like the last few quarters have anything to say about it, revenue growth is done. We're going to start seeing companies again like Shopify continue to see EPS growth because they laid off a ton of employees. I'm seeing it with a ton of companies now here in Canada. If you pay attention to telecom, TELUS, Bell, they've all wiped massive job employment from certain divisions of their company. Yet, unemployment still pretty strong. Gig economy, people Uber in, doing whatever they can to make that extra money to pay those bills. They're managing, right? So, for as long as the job market stays strong, we're going to have to ride through this higher interest rate environment. And the next real bull market, in my opinion, I could be wrong because people seem to think we're in this crazy new bull market. It feels great right now, and I'm hoping it lasts. This is money chasing money. We talked about the fact that, all these money market funds, hedge funds, they all went into bonds and GICs and high interest savings. Now they want to play catch up to show those returns, obviously, to their shareholders, to their clients. So there's just so much. There was a record amount of money market fund cash just sitting there. And that's what's probably flowing back into the market because none of this is based on fundamental growth. The market is pure Fugazi. I've been watching people even like Michael Burry, or is it Steve Eisman has been on a bunch of CNBC shows saying like, I couldn't have seen this coming. He went back in the market, managed to make some gains. A lot of people that are sitting on the sidelines right now, those are the people that are just chasing this. Problem is like, what do you do, right? Do you chase this? Do you wait? Do you keep your money market, your bonds and your GICs? Well, I'm only going to tell you what I'm doing here, not as financial advice by any metric, but as the new portfolio, which I will be doing more videos on probably this week, I guess we should talk about kind of just where we sit in the current idea of things for myself, because right now I've just been running the math as we kind of work through the mortgage details, which, we're going to be paying something like 6%. It's going to be ridiculous. It's going to be high. But now I figured was the time to do it because real estate is starting to melt back up because unfortunately there's no inventory, not in the US, not in Canada. We've gone through a soft period. Volume of sales isn't huge. It takes a little longer to sell a house, but they're still selling and they're starting to sell more for what they were even back in January. So I'm kind of glad that I bit the bullet here. And, I made sense of myself to say, hey, if there's one time to buy, it's when nobody's buying like crazy and doing $100,000 bid ups on properties. And it worked. It worked to our favor. We got a place. We're working on it. More details to come. Probably shouldn't be saying too much until things are solidified. But this has led to this massive readjustment in my portfolio, which is now taking me back down to reality because I don't got big money to play with anymore here, right? This is my half. I'm going to try and bleed in some of my fiance's stuff, and that's going to be more for Patreon content down the road, probably in the next few weeks as we start solidifying our plan moving forward, because now we're going to need it. Now we ain't bumming off our parents living in basements, bouncing between parents' basements. Man, God, that's been the good life, hasn't it? I don't know how anyone else is able to get ahead without that, because it's the only way we've been able to put ourselves in this position. So I'm forever grateful for the parents that didn't follow Dave Ramsey's advice and push your kids off a cliff into an ever extending inflationary rental prices, food prices, gas, all this crap costing so damn much. So what I've had to do is sit down and actually like run the fundamental math on my income. Is now I kind of position myself into a salary position. I actually have a real job for the first time in over 10 years, which is very intriguing to myself, but it's going to solidify and make the next, hopefully, couple years a little bit more easier on figuring out the dynamics of how much I'm going to be able to invest, because we have no money in our tax-free savings accounts. Luckily enough not to liquidate my RSP, which is where I managed to keep SCHD. I still own a massive chunk of VOO in my corporate account, and I've got a bunch of bank stocks that I recently purchased back. They've been doing very exceptionally well. But again, that could be a little bit questionable here. I don't know. I don't like saying, hey, I'm doing so great, guys. It's only been like a couple months. I hate when people look at year-to-date charts. This scares me a little bit. I'm like, give it a few years. We'll see where we're at. I don't want to trust anything too deeply here. But I've been looking at the portfolio and kind of coming back to this place of, look, like I'm not going to be able to throw tens of thousands. Maybe I will. Who knows? Maybe job keeps up. Maybe this YouTube channel continues to be prosperous and I get some extra cash and I'm able to grow it back a little bit quicker, pay down the mortgage a little faster, whatever. But I've kind of come back to this baseline in my mind. And I'm like, when it took me back to when I started investing, when you don't have a lot of money, and I know I'm kind of maybe not speaking to the choir here, considering we've got, we're working on a property and we've still got a pretty sizable chunk. I mean, this portfolio is still worth 150,000, but to me, after the scale 30s, I'm getting older. Okay. If you're younger, take this advice. It might help you, because the way I started investing was I looked at the bills around me and I said, hey, forget fundamentals. They don't matter in this market anymore. And that's the way I used to think. Just go back to that base of, what do I enjoy in life? What do I need? What companies do I use? Are they duopolies? Do they have monopolistic behaviors? And focus on companies that are solidified, that you're going to be using probably for the next 10, 20, 30 plus years. I mean, even the likes of Warren Buffett now, and I think he should be the exemplifier of if it's the only way to think in this market. There's two ways to think about this, because the Warren Buffett way is you can't make money, in his opinion, probably in this economic circumstance. That's why they're buying companies in Japan. They're looking for really moated companies that aren't going anywhere, that have severe moats, severe monopolistic like qualities. And it makes a lot of sense for them right now. It almost makes me want to buy Berkshire Hathaway because of the foreign exposure they're bringing into the portfolio. And I think that makes a lot of sense to varying degrees. But if I had to start over, which I am, I don't think honestly fundamentals matter. I don't think you need to be chasing foreign stocks. I still like the idea of 50% ETFs at this point. That's kind of where I've come in a base of complete fugazi, where nothing makes sense and no one can make sense of anything anymore. But I still fundamentally can't get over the thought of why not just go back to the reduction of simplicity, right? I have to pay my phone bill every single month. It's $45 a month. How much of these telecom giants do I have to own? If they go up or down for the next 10, 20 years, who cares? How much do I have to own to justify paying the phone bill? Well, it's not that much. You know, you got companies like TELUS that are ripping huge payments, right? And I know this might not be consistent in a market like this. You know, TELUS is seeing record revenue client sign up, yet at the same time, because of, you know, interest rates, they're still seeing a stock decline. So the company's paying damn near 6% yield. So at 6%, $10,000, $600, well, it covers my phone bill and back. That's all it would take is 10,000. And that's kind of where I'm at. You look at Hydro, you know, you're going to be paying a Hydro bill. How much of something like Hydro One, a very stabilized company, would you have to own at 3%, right? You know, it becomes back to that baseline of not thinking about the big numbers anymore and thinking about more or less the small numbers. Are you guys able to see this? Let me come back here because I don't think I'm screen showing these charts and you guys can't see them. I mean, look at things like Hydro One, right? I mean, it's such a redundant, it's a simplistic way of coming back to simplified investing, because when you don't have big numbers, like I can't just throw around cash like I used to anymore. It's like, let's just think simple. I'd always just pick 1 or 2 stocks, maybe 3 stocks a year, and I'd focus on building them up over a year. And that's how I started my portfolio. I wasn't like, let's buy ETFs, let's buy this, let's buy that. Just what do I need to own to pay a bill? Let's start on this side of the market. Okay, I use Apple. I should own enough Apple stock that if it goes up 10, 20% a year, how much do I have to own to pay off my iPhone every year? You know, just simple stuff like that. I think that rudimentary thinking will save you so much stress in a market like this, where everybody has an opinion on it's overvalued, it's undervalued. Are we coming? Are we going? Who knows? I honestly don't. And I don't think anybody does. And it stresses me out to like no end. To the variables in this market, the way you have to manage it it's impossible. I mean, I would love to sit down with financial advisors today and ask them how they're advising their clients to manage, because I feel like the only smart ones kind of come back to the rudimentary investing of just broad-based ETFs. Like, I just don't know how you tell someone to invest, because if people were scared and you freaked your client out and they put it all into bonds and GICs and high interest savings, now they're going to be annoyed with you because they missed out on this wicked, 25-30% gain in the S&P since October. I mean, even the Qs right now are only 5-6% off their all-time highs, which I never thought I would ever begin to see again, right? So I'm also seeing a lot of fixation on ETFs. And I've seen a lot of criticism, especially on ETFs, let's say like SCHD, for example. I've been seeing people saying, oh, the PEG ratio, it's overvalued. It's this, that. Look at the Qs. They're just going bananas. And SCHD can't even keep up with the market year to date and all this different stuff, right? And I think fundamentally, when you look at the components and the stocks and what's going on like a large scale of the biggest companies, 6 or 7 companies has made up the vast majority of the growth. Almost none of them are experiencing like record revenues by any metric. Like Apple's not doing it. Google's fighting. There's a few exceptions in there. Maybe Nvidia is going to post a stellar quarter. Who knows, right? But the fact is few companies are managing the growth. And if that lasts, it's great. But what I'm hoping happens is people start picking up on these lower weighted companies, things that are sitting in SCHD, some of the financial sectors, things that are a lot more unfavorable in this market environment, and might be continuing to be. But when you macro out of those several stocks that have been driving the indices, the market hasn't done anything. It's just bounced back slightly. Most companies aren't just flying to the moon like our Metas are. Thank God, I'm so blown away by these companies. I mean, just utter awe that we're in this market we're in. But I just can't help but look at some of these companies and just be like, look, this is probably a good representation of what's actually happening to the economy. I mean, most of these companies aren't seeing absurd growth. And that's probably true for the larger caps, and it is. But for some reason, they're just able to like wickedly rally. And people are just taking that base chart and saying that's reality now. The stocks go up, stocks go to the moon. And I've always kind of got this gut feeling of fundamental investing, right? Because when I bought Tesla, I understood some of the fundamentals of growth ahead of it. And that made sense up to a point. Same with like Apple. I mean, it was just easy when revenue was all-time highs. That there's just no fundamental way to do that anymore, right? So you cannot be looking at stock charts. It just doesn't make sense. If you like a company at this point, and honestly, I think there's more value in small caps than there probably is in large caps today. When I look at small caps, there's a lot of companies I'm starting to love. I'm working on buying a few, that some of them that I've been working with outside of this YouTube channel that I really want to buy in some software spaces that have been really underappreciated. Non-disclosures, unfortunately, makes it a little harder for me to even discuss a lot of the stuff that they're doing. But I think I'll probably do some videos on a few of those, just because if we're pure value based, all the real growth can only come out of small caps on a revenue basis right now, because I just can't see it coming out of large caps for a little bit. Doesn't mean they're not going to go up, but I think it's going to be more likely that these small caps are fighting to get to positive cash flow. If you're not AI and if you're not positive cash flow, no one gives a crap. So I think a lot of these small caps recognize the value of that, and they're fighting for positive cash flow. I'm seeing it with so many companies that are going to be positive in the next year or two. I think that's where the value is, because most of them are underappreciated as people have been hiding out in their bonds, GICs, and large caps and these bigger ETFs. And again, I think there's nothing wrong with that. If you're just looking for that real money, that's probably where most of it's going to end up coming from. In the near term, I think is going to be some small cap growth. I think that'll be the first real pivot into a new bull market, which again, maybe I'm wrong, maybe I'm not. Who the hell actually knows? So at the fundamental base of it all, I think you just need to pick the best companies you love. Forget the valuations at this point and just cost average. Don't lump sum anything. Lump summing doesn't make sense anymore. It made sense back in October. If you go watch the October videos I did where I was ranting and raving about just buying stocks, it was great. It was la-di-da. But now as stocks go up, valuations get out of control. Nothing makes sense. Nothing at all since 2020. The pandemic ruined everything for everybody. Pandemic, Twilight Zone hit. We've never gone back to a place of normality, sadly to say. Sadly, small caps will suffer a big time with high interest rates. That is not true, sir. Large caps are more likely to suffer with higher interest rates because of debt. You look at large infrastructure-based companies. Most companies outside of tech companies are usually pretty straddled with a lot of debt. And even large cap companies, because they don't have growth, are still going to cut. Like, you look at Meta's spending was out of control on Reality Labs, so they fired a bunch of people. They're going to bring their EPS back up. The problem is with large caps, right? That's the debt that they have. REITs, any large cap REITs, they're all going to experience a decline to some extent, probably in earnings per share because of debt payments. I'm seeing it across the board. Small caps have more malleability, I guess is maybe not the right word, but they have a lot more options in the way they leverage themselves, because a lot of small caps, and a lot of them probably do, but a lot of them that I'm looking at don't have debt. A lot of them are in a position to explode realistically. Like, they're in positions of good controlling technologies. They're starting to scale. I'm working with a company that last year did I think 80K in the first quarter of revenue. And now they're at almost $1 million in the quarter. And I'm talking to the CFO of the company, and he's telling me, look, either we're going to get bought out in a couple of years, or we're going to start paying dividends. There's no other way about it. And this company is down 70%. The values are starting to make a lot more sense on it. And I'm seeing that because people just, they're not as intrigued by this. Well, some of them are getting more intrigued by the risk of small caps. Small caps are starting to rally, but there's a lot of them that aren't riddled with debt. You just got to find the ones that aren't, if you're looking for growth, because I still think it's prudent to have a diverse portfolio with some of those individual positions that you're comfortable with. But at the end of the day, I mean, you just kind of got to focus on, like I said, that's more value playing, in my opinion. That's more Warren Buffett investing. Warren Buffett doesn't care about small caps, but that's where the money's going to be made. If you're a younger investor, you don't have as much capital. I still think there's way more opportunity in that space if you're diligent, because again, diligence pisses people off when they're not willing to sell when things crash. And then they're like, oh, it's just a buying opportunity when it's down 90% and they bought the all-time highs. You're pulling a tattooed chef with Jeremy from Financial Education. You don't want to be in that position. With small caps, you got to be on it, right? You got to be paying attention to the quarterlies. If things shift, you don't trust to get out. I did that with TSM. It broke my heart. Taiwan Semiconductors, super good value play. I was all on board when revenues were up month over month, and then revenues dropped. And it scared the crap out of me, because I was like, I thought this company would have been immune, and they're not. And then the stock still went up. At least I took some profit, but my God, if I held it at least over 100, I would have been happier. That's where I made that fundamental mistake of believing that fundamentals in a market like this matter. It's a market where you just pick the best companies, you just cost average, and frigging forget about it. Never sell them. Do what Buffett says. If you're buying them, presume it's like, buying a house or something. You just buy it, forget about it for the next 30 years. It's the only thing you can realistically do. And that's kind of where I'm at this point, because I don't know how else you do it anymore, folks. I don't think anyone that runs valuations on even Tesla know what the hell they're talking about anymore. I don't see self-driving out there yet. I'm seeing Waymos. They're out there running around on their own, but Tesla's still not there. I mean, I'm looking at all these companies, big promises, but no delivery. If I had to make a big promise on a company I think is going to do well, still Meta. I still think fundamentally that Meta is probably one of the better buys because I see their future more concrete. You know, Apple's trying to do their metaverse and they have like no idea who's buying that product. No idea. People are going to buy it for fun. I don't think anyone's going to use it. Meta already tested that out with the Pro they came out with, and they already dropped the price because no one wants it. You know what people want? Metaverse gaming. Gaming is hot. Meta's got a control over that. I think the Quest 3 is going to sell out like hotcakes because I'm going to buy one. And when Apple's releases next year, I think there'll be some comparable interesting to see who actually ends up paying $3 or $4 grand for that. But again, you got to look at that, right? If I'm looking for growth and I'm playing that fundamental game, I'm not going to sit here and run Fugazi numbers on the future. There's no idea what's happening right now. The only thing that is happening is cutting of controlling cash flows and EPS. Companies that do that successfully going to go up. Shopify probably going to post good numbers. Apple, I don't know if they've done a bunch of layoffs or what they're going to do, but I'm sure they're going to find a way. You look at these large caps, that's what they're doing. If they do it successfully, they'll ride through this high interest rate environment. Things will be cherry, in my opinion, if they continue to do that and we don't have a rough landing. Let's just go through a few comments here. I'm just rambling now. I feel like I'm circling a little bit too much. With negative earnings coming for TELUS in the next few months, I wouldn't bet on it right now. Yes, that is a massive fear with telecom giants. If there's one thing history shows, if history seems to be, you know, not that history matters, but if it does show back in 2008, even during the dot-com bubble, TELUS was one of these companies along with any large infrastructure company. They tend to get hit pretty hard. I mean, we saw TELUS do a 50% drop during 08. It did a 80% drop in 2000. Obviously, the business has changed. The only thing that's giving TELUS an edge is the sales. Canada hit a record 40 million people. Talk about this, a broken record. I should share the screen because I feel like I keep forgetting to share the screen. Sorry, folks. Yeah, no, TELUS again, just to show you real quick, it did do that massive drop off of 50% in 08, even more in 2000. But again, the thing that has some of these companies at bay is the insane growth. This is what I'm saying with the banks. I think people are underappreciating the banks. I think they're going to struggle. They might struggle. But the fact is these companies are experiencing record customer growth. I mean, go look at Royal Bank. It brought on like hundreds of thousands of clients, I think, in the last quarter of last year, something ridiculous. I mean, TELUS had a 10-year record in customer acquisition. And that's the only thing that's going to balance that out, because they're going to continue to get that revenue growth because Canada is unfortunately, this is really bad to say, but I think they need to cut off the population for a little bit. They need to let the economy catch up because there's too many people coming in that's competing for too much of the housing. That's stabilizing the overpriced housing economy, which has been in a bubble probably for the last several years. That's also driving these companies, these monopolies, to these record numbers, but they can't see it on the bottom line. And that's why I think this is the time to accumulate them. Yeah, I mean, TELUS could easily drop another 20, 30% from here. Absolutely. But the fact is eventually we're going to be on the other side of the higher interest rate environment. Eventually, they keep saying that they're not going to lower them anytime soon. But I promise you, as soon as inflation's under control and the economy starts to get a little more burden, if they push it that far, they'll cut interest rates. They'll bring them back down to a nominal, I imagine, 3 or 4%. They're not going to stay above 5%. There's just no way. I can't see it. Now, it could persist for another year, maybe 2. But once that day comes to its finale, these stocks are going to start recognizing that record revenue and customer acquisition growth. It's an inevitability. These are services people need, and there's more people and there's more demand than there's ever been, especially in the Canadian economy. So why not buy the dip? It worked out if you bought Apple and all these companies when they dipped, and everyone's like, oh, revenue's dying. It's the end of tech. It's finally over. If you bought it, you're certainly not complaining right now. And I think that's an inevitability for a lot of this. That's why I'm saying pick fundamental companies that either have duopolistic or monopolistic behaviors where they're not competing with a lot of people. And if they start going down, just cost average all the way down for the next year or two and then ride it for the next 20 years. You might see a dividend cut here or there. You might see some stuff, but honestly, the economy is proving resilient. It's probably one of the most resilient economies we've ever seen in our entire lives. People are slowly waking up to that reality, is somehow in record debt and all this stuff. Jobs are good and the economy is still trucking along. How? Who the hell knows? Nobody knows. Nobody knows. Do you trade futures? No, I don't. I'm a very simplified investor. I should do options. Talk to a bunch of people. We look at options plays all the time. I think the best thing you can do, forget covered call ETFs and just buy enough of the S&P, VOO, SPY, do whatever you got to do and just write Weigh your options against that. It's just an easier way to cash flow without dealing with so much crap. But I do not trade futures. I'm a very boring investor, my friends. I just buy and hold mostly, except lately I've been in and out of a lot of things. True. But you really have to look at their financials, not small caps. Yeah, we just discussed that. And I'm madam, not sir. Sorry, Dominique. Madam. I don't want to say ma'am. You're probably much younger than that. Do you think Canada will raise another 2.5 in September? I don't think I don't like making predictions on what they're going to do. I don't think they should be raising rates anymore. Honestly, I think they should have stopped a while ago. I think they've proven their point. I think people are experiencing a lot of pain. I think people understand that, most of the interest rate or most of the inflation is now driven by things that actual like interest rates are causing, the government is causing. We have this split problem when it comes to the interest rate environment, right? Inflation can only be controlled by two mechanisms: government policy and the Treasury here in Canada, or the Federal Reserve in the US. The Fed, the Canadian Treasury, they have one tool: interest rates up, interest rates down. They have no control over policy, right? And the government can control a lot of policy on, commodities. They could easily here in Canada cut carbon tax, and we could see a massive reduction in fuel costs. That would immediately cause a reduction in overall inflation when you're talking about things like anything fuel related, your food, your housing costs, materials, all this crap. So the government has basically caused this forced inflated situation at this point because we're still bringing a lot of immigrants in Canada. The government, isn't doing anything to alleviate, carbon tax or taxes that are actually inflicting the entire economy. They're raising interest rates, meaning people don't even want to sell their homes. They want to hold on for as long as they can. They can't buy anything. If they sell, they got to go get a new mortgage. They're going to hold that through to renewals. So we're seeing this forced demand, right? We're seeing it in rental properties. Do you know what people are doing to rent now? A bidding war. This is why another reason I'm glad that we got into this position to purchase real estate, because you literally have to bid now on rental units. I was watching a lady in Toronto complain miserably about it. She had to move and she looked at 3 different apartments and she had to get in a bidding war. Whoever wants to pay the highest price for this rental unit is going to pay, and it's going to be probably over $3,000 a month. You got to pay about $40,000 a year to live in a major metropolitan area here in the city of Ontario. If you're going to move to Vancouver, and that is all baking into the inflation. And these are controllable things. These aren't metrics that I think should represent the true idea of inflation, because most of it isn't being caused by commodity inflation anymore. Most of it isn't really being caused by food inflation or all this stuff. That's starting to nominalize. If you just look at housing, it's one of the primary driving causes right now of inflation, because again, mortgages go up, monthly cost of housing payments, all of that is baking into making it look much worse than it probably should be. So do I think they should increase it? No. I think they should wake up to the reality that they're going to start causing probably more pain that's necessary. This is 6% interest rate when these renewals come through. Like, this is really going to put a lot of strain on the economy. I think we can handle it because, we're handling it. But again, I don't think I should be, I'm in a microcosm of parents' basement, right? So don't use me as an example to know what's going on with the broader people when credit card debt's at all-time highs, because people are just ridiculous. Do you still hold Tesla? I want to buy Tesla. I wish I bought it when I was around 100. I would have pulled the trigger below 100. And I still think, yes, Tesla probably will be in the top 10, if not the largest, most valued companies on the planet when self-driving becomes a revenue generative business. And unfortunately, I'm looking at other self-driving companies that are actually better than Tesla because they're already implementing revenue generative software in places where self-driving works. Warehousing. There's companies operating, roboticizing these forklifts. You're seeing it in Amazon factories, and the companies that are doing that are making money right now. Tesla's stuck in this paradigm of we're lowering prices, we're losing margin, yet I'm telling you the stock is worth this much because of self-driving and robotics, nothing that exists today. And I love it. I told you I would buy Tesla back the day they start actually implementing self-driving. And at the right value, I'll buy it, but not at this value when they just don't have any of that implemented. That could still be another 5 years out. It kind of reminds me of Steve Jobs in the 1980s describing literally a tablet. He had that vision in the 80s, and he's like, I could see this being 10 or 20 years out. He's like, inevitably, you'll be wireless, and it'll be something as simple as like a book. Like, he literally described it. The problem is people over-exaggerate how fast these futures are coming. They are an inevitability. They're going to happen. They're just not going to happen on the timeline I think people think. And because of that, there's going to be massive volatility in the meantime because it's going to be left up to interpretation. So if Tesla considerably continues to post, yeah, we're making record car sales, but our margins have shrunk, everything is shrinking, I don't know how long people will put up with that for. And that's, again, going to lead to further volatility in the stock price. But I do think if Tesla can bring into fruition and be a competitor and be one of the main leaders in self-driving, that's $1 trillion industry. That alone would surpass Apple's iPhone in 10 years. If it happened today and it started scaling, give it 10 years, doesn't matter. Tesla's the largest company on the planet, because the market cap and the capability of that, when you're talking about, again, just think about it. In Canada here, they already have self-driving companies testing food trucks on the highways. They're loading food trucks at these warehousing so they can sit on the highways and just drop it off at the end of highways. I mean, the money of not having drivers and all this stuff, it's an immense amount of capital, and it's immense amount of value creation. So it's something that I'm looking forward to. I think it's going to happen. If you want to ride Tesla, and again, take out the consideration of value, just buy the ups and the downs and cost average into it for the next couple of years and just be patient with it. And again, when I mean be patient, and people hate when I say this, but look 20 years out. Someone's like, oh, you don't know what's going to happen 20 years out. Well, typically the largest companies, and we talked about this, if you go back and look at 2000, the largest companies on the planet, if you picked 5 of the largest companies, you wouldn't actually have done that bad. GE went down, sure. Walmart did great. Even GM is like, these companies that aren't doing that great today, you still would have done fine over the last decade. You still would have done actually exceptionally well if you diversified the top 10 largest companies. ExxonMobil has done exceptionally well. You look at the dividends, you add all that into play over since 2000, a 20-year period. Sorry, 10 years. Let's talk about the 20-year period. I think people underestimate that these big companies, with the impacts they've had on society, they're going to be here and they're worth making bets on, in my opinion. You just have to understand you're paying wicked valuations for them today. So it takes time for that to play in. Great show. How do you compare TELUS against Bell? Honestly, I don't know. I liked Bell until they started having issues with Bell Media. They're cutting a bunch of the hosts. They've laid off a ton of their media division. That's what we're seeing in all companies, though. But I like the telecom giants here. You can't lose with them. I call them recession proof. That doesn't mean the stock can't go down. I call them recession proof because they can't go anywhere. They're an insurmountable valued thing in Canadian society. There's 3-4 major telecom giants. There's 5 major banks. That stuff could go through turmoil and the government to bail it out in a heartbeat. It's recession proof, in my opinion. I think the rates will go up a couple more times. Our car dealership holds around 80 new cars in our lot. We have nothing. We have 50 down payments upcoming in future units. The market is still hot. Yeah. Sorry, I'm not sure I'm understanding this question. We have 50 down payments upcoming future units. What are you doing, man? 80 new cars in our lot. You're going to have to extrapolate. Maybe I'm just not reading that correctly. You and your fiance are really off to a good start. Good job and congratulations. Yes, your parents helped you and you're privileged. Yes, I agree. I'm not saying I'm not privileged by any metric, but you took action with strong plan. And you deserve your success, which comes with an insurmountable amount of anxiety. I honestly, it's me and my buddy were talking about this because we're in a very privileged position by all means. We can't afford a multi-million-dollar home. We can at least get a comfortable condo that we can easily afford, but the anxiety of all of this is stressful, even in the position we're in. And I'm trying to remind myself of that. Like, people are going through a lot worse. I shouldn't be so anxious about everything, but lately the anxiety has been off the scale because I don't understand fundamentals anymore. The real estate stuff is ever more convoluted than it has been, and I never ever want to buy real estate again. I don't know how people enjoy doing it. It's a lot of people involved. One of those people fault out, you lose a lot of money. It's just super stressful, man. I don't like it at all. I never want to get into running. I don't care what anyone says. I know you can make big money commercial real estate. I've even been watching, Life for Sale. I mean, go watch that guy, man. That guy, I don't know how he manages the stress that he has. That dude has been losing millions of dollars. His interest payments are costing him hundreds of thousands of dollars more a month. And I just don't know how people enjoy it. I don't know how people enjoy managing tenants. I just don't. I get there's money there, but it is not passive by any metric. And it's more convoluted than it's ever been. And the only thing I'm grateful for is if I get to that point, I'm never going to sell the place we're buying. There's just no point in it. Once you get in the market, never get rid of it. Keep it forever. And we just pay it off. And then if we want to move, we rent it out. Cash out, refinance, go rent somewhere. We move somewhere that's way cheaper, less stressful because, here to be a millionaire is to be middle class. And there is nothing to do with real estate that is small numbers anymore. There's nothing under $500,000 you're going to enjoy living in. There's just, it's just ridiculous. I feel bad. If I was 20, I had to do it again, I'd leave. And I implore every young person that's going to school, has student loan debt. You're young. You're not as attached to family as we are. Get out, leave, go somewhere. Alberta, Newfoundland, go to the US somewhere where you can work a remote job that's affordable. Go find something where you have leverage and control, because the only way we've been able to do that is, like you said, being privileged and having supportive parents. And if you don't have that edge, you're screwed. It's unfortunately tough times make hard people. our parents' generation can no longer call us these lazy millennials, because I think we're facing some of the hardest trials when it comes to finances. You know, even kids that want to get an education now are paying so much, and that doesn't make sense either. How are some of the largest companies that they were publicly traded would be schools? I mean, some of these schools in the US have billions of dollars on their balance sheet. Is that even fair? Does that make sense? No. So I feel bad. We have 50 people with at least 500 down payments on cars that are not yet built. Oof. Well, that's good. I mean, if they can come in and actually get the, follow through on it, that's the question. Are they going to follow through on it? I feel like there was a big spike in car repos, but I don't pay attention to it. Maybe you do. You're seeing a lot of repos going on, car values are still pretty high. What is it saying here? We'll see on August 8th when they report the Q2 results. Yeah, earnings are coming up, folks. So sit back, relax, and get ready for what dictates where the market goes, I guess. I don't know. I can't. I've never been so rattled. This is a rattling time in life, folks. It's very rattling. Age, stress, bullshit. I want to just unwind. That's why we're fighting for this financial independence. And I know people don't think it's possible, but trust me, frugality can still exist. You go to the mall, stop buying expensive food. You complain food's too expensive, you go to the expiration aisle where things are expiring in 3 days. You know, the hauls we bring back for $20, get enough fruits and vegetables to last us like the week, and they're not expiring that day. I mean, by God, people, like, you can be more frugal. We were just having this conversation with some family today. Like, why do people complain about how expensive shit? There's ways to work around the expensive world, folks. There's always ways. It's just not going to be handed to you on a silver platter like it was anymore. Even our dollar chip aisle. Oh my God. I watched Pepsi CFO today. He was complaining, or he wasn't complaining. He was just saying that, hey, we've only raised the price of our foods and our products as much as the commodity price has gone up. And my dollar chip aisle at Walmart, folks, is now at $1.70. It was 98 cents an odd year ago. I can't even buy my dollar chips anymore. I got to spend almost $2. Ugh. That's where the real pain comes in. Did you end up buying a house or a condo? And what's your take on the GTA residential real estate? If you want to get real estate, get it now. Bite the higher interest rate. If you have a larger down payment, you can pull it off. This is going to be the only time it makes sense. I could be completely wrong. The entire market could collapse under us. Maybe these mortgage renewal comes up. There's a flood of people throwing houses on the market. But the people that are now, they're getting sold. So my biggest fear, and like I said, the reason we made this decision this year is because I looked at the Canadian real estate market, and you go back a year ago and it was bidding wars. Everything was rising up. You couldn't buy anything at face value, and it was out of control. And I didn't want to be a part of that. I watched vloggers that fought through that, looked at several properties. Our cousins we've talked to, they looked at 5 properties, put offers on 5, finally managed to get one. To be honest, this market, we put an offer on the first place we liked after looking at 20. It got accepted. Which again, super alleviating. There was no stress. There was no bidding war. And again, that's the only reason I think it's worth getting in right now, if you can afford it, because this opportunity I think is going to come and pass. I just think the lack of inventory, the lack of loose regulations on being able to develop, the only companies developing, and it's going to become congested, is malls. You look at smart centers here in Canada, you look at RioCan, you look at even Costco wants to build condos above those areas now because you can't build anywhere else. We have greenbelt limitations. There's so many limitations that on the outskirts of Markham, Richmond Hill, you're seeing some development going on, but that's taking years. They just can't keep up with the amount of people that they're letting into the economy. That's why I'm saying cut off the inflow. It's going to be short-term pain for long-term gain. Obviously, it stimulates the economy, but we can't keep letting people in when there's just no supply for them. Homelessness is exploding. Like, there's just no supply to help these people. There's no supply for affordability. It's becoming a rich person's playground. So, if the market takes a bit of a breath, and this is the opportunity, take it if you can afford it. Like I said, I looked through it. I said, hey, this is the time to do it. We looked at properties for the last 4 months and we just pulled the plug, and it worked, surprisingly. So, I'm taking it for what it is and praying to God we can make it last and sustain. And yeah, I wish you the best. The GTA is out of control. I did a little video a little while ago you can go watch, where I talked about the supply issue. If you look up 2 beds, 2 baths in Richmond Hill, Markham area, GTA, you go out to Aurora, Newmarket, look at how many condos. Forget housing. None of us are affording a house. I'm going to leave before I spend $2 million on a 5-bedroom house. I'm sorry. That's never going to happen. I could have $10 million in the bank. I'm never buying a house here for that price. It's never going to happen. However, if you're in like us, the bottom feeders, looking for the more affordable, comfortable 2-bed, 2-bath, 1.5 bath condos, there's nothing there. There's like, I think when I was looking last week, when I did that video, there was 20 places in all of Markham, maybe another, 20 or 30 in Richmond Hill. Think about how many people are moving here, how many people live here that want to buy those kind of places. And again, we weren't the only ones that bid on our property. There were 4 offers. We just made a reasonable offer because I'm like, I don't want a low ball. Let's just put in what we think is fair value for the place and see if they accept it. Because like I said, there's no low balling anymore. Things are still moving in the GTA. If you want to be real cheap, go out to Cottage Country. There's some deals out there, but even those deals are getting bought up now, and those homes are almost at $1 million again. At the peak of the market, I was watching homes my parents were looking to buy sitting at 1.2, 1.3 million. Those homes then started selling 3 months later in the 800s, and now they're back into the 9s to $1 million range. The market dropped and recovered within 4-8 months tops. I don't know if it's going to persist, but that's where we're at, and that's the reality of it. It's unbelievable, to say the least. Not much repos. We have people that buy brand new cars, take them to the auto auction, and sell them at higher prices. I've never seen anything like this. Is that true? There's some arbitrage there, man. Take advantage of that knowledge. Holy crap. I bought my car in 2019 for $7,500 and it's still worth over 10 grand. Blows my mind. Yeah. Cars, man, if you have a feel out for that, there's good money in buying and flipping, baby, but I can't believe you can get more at an auction. Yeah, maybe do that, man, for the time being until EVs start taking over. That'd be a good game plan. Sustainable passive income, the way to go. Yeah. I've rudimentary. I love stocks, and that's what I'm going to focus on. Passive income, ETFs, get your dividends coming in and just call it a day. Use it for retirement. At least it'll keep up with inflation. You know, if you've been holding stocks for 10 years, you can complain that inflation exploded, but so have dividends. Dividend growth has exploded over the last decade. That should hopefully alleviate some of that stress, right? That's the whole reason we do it, to keep up. For anyone watching, don't buy a new car. We went from making $3,000 per car to 7. Oh my God, Jesus, man. I don't buy new. I've never bought a new car in my life, so I don't know that pain. I don't know that pain. I've been through 6 or 7 cars over the last 10 years because of a lot of driving in my past career. Never bought new, never will. I'm one of those people like Dave Ramsey. I don't think you should ever finance a vehicle. I think it's the dumbest decision you'll ever make. You can negotiate used cars. You don't buy a used car right away. You take 4-5 months, whatever it takes, and just look for what comes up that's reasonable. I bought my car off a teacher, a 2016 Hyundai hatchback, had 130,000 kilometers on it, $7,500 cash, baby, all paid off. I could write that thing off tomorrow, and guess what? I don't give a crap. You know, my insurance, nothing, because obviously I don't have collision. I don't care about collision. I don't have financing on it. I don't got to cover any of that crap. So my car costs are like 250 Canadian dollars a month. That's what it's worked out to being for the last 3 years. I ran the math on it. I'm like, with insurance, fuel, and everything, $250 a month has been the average. And you want to compete? Let's compete on who's more frugal. Because when it comes to cars, baby, I'm the best. My job looking at cars, deals, paperwork for 18 years. It's nuts. Good for you, man. I hope you're making good commissions, man. Well deserved. Commission career is where you want to be. Make that money, man. Make it while you can. I honestly don't want to get caught up in this AI revolution. It scares the living crap out of me. My job is definitely going to be replaceable in the next 3 years, or most of my job. Outside of the personality side of it, we're already utilizing AI. I'm sorry if you haven't seen it. You know, if you have Photoshop, I mean, look at the tools Photoshop's given. My fiance, she's got access. She's a graphic designer. Her cousin and her uncle are walking into Canada's Wonderland holding hands. Very cute photo she took. And within 2 clicks, it wiped everybody in the surrounding area. And there's just this really nice, clean shot of them walking into Canada's Wonderland. You know how much time that would have taken an editor to do? And it took like 2 clicks. I'm like, even in my job now, like we're using, like, I was just the CFO of the company was just showing me, they were using Trump's voice to animate a video talking about the company. And it was flawless. It was so good. I'm like, you know, that's going to be the new YouTube at some point. It's kind of daunting and annoying because I think personality is going to be valued in the future. Because if you don't put your face on the camera, you can literally just use AI now to do all the scripting for you. It can do pretty much all of it. You just write out what you want to say. You put some visuals over the screen, you're done. You can have any name personality you want doing it too. And it's kind of wild, man. I don't think people appreciate. We were talking about what jobs are going to be the most sustainable in the next 10 years. And we narrowed it down to probably plumbing. Plumbing, yeah, maybe if you get into some electrical or anything that's so finicky, a robot is going to take a long time to evolve to deal with the finicky nature of, you know, dealing with plumbing. HVAC, baby, going pump the septic tanks. That stuff, you'll be good to get to yourself to retirement. The goal is to get to an early retirement. So you need to figure out what's going to be the most sustainable for the next 5 or 10 years and just drill it for as hard as you can before something comes in and takes your job. Because every job is going to be taken here sooner or later. My dad doesn't think so. My dad thinks, again, give it 30 years. I'm not talking about overnight. My dad does foundational work, and there's robots, there's 3D printers printing foundations at home now. And I told him, just wait. Just wait. Eventually, there will be robots doing most of the manual labor, and there will be 3D printers building most of these condos if they're not modular by then. Most homes, I think, in the future will be more modular based because it's cheaper. It's the smarter solution. I'm sure you've seen modular homing. You can buy a $50,000 unit, put a small foundation and plop that sucker down. If you want to get a new house because you have kids, don't buy a new house. Spend another 50 grand. Expand your modular home. That's the sensible future, I think, for housing. It's not here yet. You give it 30 years, and that'll all eventually be done by robotics. It'll be shipped by a truck that's self-automated, and one mechanic will come in and use all this automated robotics to do most of it. That's going to be the reality of the 30-year future in my mind. And, it's sad. It's going to, we talked about it, man. Me and my uncle have been crying over this future. So I'm like, capitalism was made, I think, for like the nature of humans, because you find fulfillment in providing to your fellow man. As an entertainer, I get off on, going on stage or being in front of people and having conversations. Like, that's what gives you life, providing to society, providing to your family. But it's going to get to a point where entertainment's going to be the fundamental idea, I think, of humanity. And it's going to be like WALL-E, those fat people in chairs. What are you going to do? Most of it's going to be served by robots. My dad doesn't think so, but I'm very confident if nature makes it that far without extinguishing us, it will be there, baby. We'll be there. Space travel probably the most intriguing thing. But again, robots are the best option for that, not people. In the future, we will not know what we see, whether it's real or AI generated. It's crazy if you go back to the 80s and how forward looking and, how far out all of that seemed, when you look at things like Back to the Future and you're like, even the Jetsons, we're so far out from now. Flying cars and jetpacks. Remember when jetpacks was a James Bond like fantasy? And it was kind of like conspiracy that those things even exist. Now they exist. Now all that shit exists. All of it. It's kind of wild. And it's only happening faster and faster. Kyle, you're too young. I was around when computers were born. I caught the beginning of the computer generation, because we grew up with internet that, you dial up, you couldn't answer the phone while you were on the computer. I was still in the early stages. It's funny because newer generations born like 2010 era, they haven't experienced the real reality of the jump in technology, right? They're just stuck with an iPhone that's been an iPhone for the last 15 years. We've experienced everything from H-track. I wasn't during vinyl, obviously, but, we went from the whole H-track, you went from, then CDs and then obviously MP3s. I mean, that was my childhood. My childhood was outside in a farm, shoveling crap and stacking hay. I didn't have a computer-based childhood. I wish I was more like Bill Gates. Maybe I would have been a little bit farther ahead at this point. Single detached house averaged 388,000. Where, Vic? Where? Tell me. It's not in Ontario. I haven't seen those prices anywhere outside of a 2-hour drive of Toronto. And 2 hours is a long way. You go all the way to Kitchener. Hell, you go all the way to Niagara Falls, and you're probably still not paying those prices. Construction jobs are going to be the future for high-income earners. They still are good high-income jobs. I mean, you can make, 40 to 80 an hour doing construction jobs, and those will be the jobs that will be around, I think, for the longest. I don't think they're going to be around forever, but they'll be around for the longest. I think truck driving is probably a job I'd be very skeptical of. It's probably one of the biggest driving industries in the U.S., but I'd be getting the hell out of that industry. Educate yourself. 5 years from now, that might not be an industry. Where? Yeah, where, Vic? Where? Alberta. Thanks. Thanks. Alberta, man. We were going to move there, but family is keeping us stuck. But yeah, that's where I'm saying, man. Go to Alberta, Newfoundland, get out of here. Get out of the rich playground of these millionaires. It's not fun anymore. Look at San Francisco. I mean, the massive disparity that scares me the most is wherever you see a mass shift in disparity of wealth tends to cause crazy amounts of crime. The US needs to start really putting massive laws on theft and just give them 10-year sentences for theft now. If they do it in New Zealand or whatever, New Zealand's got crazy criminal charges for like minor crimes, but they don't have a lot of crime. Somebody was telling me they were in New Zealand and they forgot their freaking like laptop at some Starbucks or someplace for like an hour, and they came back and it was still there. People don't steal shit where the crime is excessive because, we went to San Francisco last year and it is a weird place. Everything shuts down at 9:00. It's like sketchy. You can't park anywhere and leave shit. People leave their windows rolled down so people don't smash and grab things. You know how insane that is? That like the amount of theft, and you drive through there and oh my God, it's like, it's such a weird vibe and it's such a beautiful place. The most beautiful places on the planet have the weirdest economic circumstances, but that's not how it used to be until big tech came in and ruined it. Yeah, I think Toronto's becoming the same. Have you ever been downtown lately? When I was a kid, I used to wander around at 1 a.m. after entertaining at some club somewhere, and there'd be like one crackhead running around saying, "Oh, like, give me some change." And that was it. You felt fine. Now go walk down Dundas and like at midnight during the week. It's Gotham City, folks. It's horrifying, and I feel bad. I mean, how do you deal with that? It's crazy. How homeless will poop in your car. It's better than having a smash and grab. At least you can clean the crap out. Condo 7. Don't remind me, Vic. I know condos are cheap. I know you can buy penthouses for $500,000. I know. Don't wait. I'm really looking forward to showing you guys what we've done with this real estate stuff. I'm just keeping it tame for now. I don't want to jump the gun until things are concreted, but we're getting there. All right, we're getting there. Toronto is gross. It's still a beautiful place. I love the city. It's where I grew up. It's my backyard. I've worked there my whole life. But I get it. Yeah, Toronto's becoming a very weird place. We got to have a little more street sense than we used to. We need Batman. That we do, good sir. We definitely need Batman. What's your opinion on STLA Stellantis? Bud, what is that? Stellantis. It sounds very familiar. I'll take a look at this, and we're going to head out here soon, folks. I appreciate you all stopping in. But let's take a look. Stellantis. I like looking at new stocks. Give me an idea. Stellantis. What do we got here? This stock is almost peaking some good highs this year. It's definitely recovered. We'll do a quick screen share and show you guys. I always love the stock shares. Always recommend stocks. Kyle, you are the Batman. No, I am not. I can barely save my own ass. I love to help other people, and I'd love to be more giving like my fiance, but even with the money we have, life is still horrifying. You're always one wrong move away from losing it all. You got to be real careful. PE of 3.15. What does this company do? How does that make sense? What do we got? This is a multinational automotive manufacturer corporation. This is kind of like what's the company here in Canada? Magna, that's one of the biggest contracts with the Stag Industrial REIT. I do like Magna, I do like Stag, but bordered between Italian-American conglomerate Fiat Chrysler Automobiles. Wow. Very intriguing. Why is this company so cheap? Oh, where did I go? Oh, let's go down here. Let's just take a look at some of the fundamentals quick. I'm very curious. This is kind of intriguing. $58 billion market cap. Incredible growth from 108 billion to 179 billion. Gross margins aren't that crazy, but obviously this isn't a tech company. What happened here? Jesus, man, what stabilized revenues? What about the cash flow? What does cash flow look like? Cash flow growth from 2 billion to 10 billion. What is going on with this company? So far, basically, I'm loving it. Statistics, what do we got? Dividends, 7%, trailing dividend yield. Payout ratio is only 19%. Damn, that's better than most of the aristocrats. Short interest, there's not much going on there. I'd have to take a look at the shares that stand. They probably haven't been diluting much, right? What's the margins on this? So 20, where's margins here? What am I missing? Operating margins, profits 10%, not bad. Revenue's pretty good. This is a good company. I haven't looked into it. I wouldn't buy it based off just what I'm telling you, but as far as I can tell, this is pretty good. What about assets, liability? A little bit more liabilities than maybe I'd like to see, but still pretty reasonable. A lot of the infrastructure companies have probably more debt than that. Shares issued, they're actually not really issuing. Well, they did issue a lot of shares in the last couple of years. They've still been able to do well with that invested money that they raised. So not bad, man. Not bad at all. Good find. I'll have to look into that one a little farther. Thanks for the share. Any other shares, always leave them down below. I do appreciate this a lot, guys. Robinhood gives advice to make poor people become rich. Kyle equals Robinhood. I appreciate that, man. The Robin Hood of the clown market. I am the clown. I want to become the king of the clowns. I notice a lot of people are playing into that these days. Strongman, personal finance. A lot of people understand this is bullshit. It's all bullshit, folks. So don't get too tied into people feeding you these numbers. Just because those numbers look good doesn't mean it is good. I'm not Batman. I can barely save my own ass. Who can, man? I don't think people are just as gracious as they used to be. At least, in a world where inflation's insane and interest rates are eating us alive. But I'll leave that up to you. I don't want to ramble. I appreciate you all coming out. Stay tuned for episode 2 coming next week. You want to continue the conversation, join me on Patreon. Link is always down in the description below. Chat groups, tools. We're really kicking things off on personal finance there. I'll reveal a lot more about my finances, my fiance's, and so much more in between. But as always, I look forward to these weekly live streams coming back again to you live. As always, folks, peace out.